Things were starting to work out for Jasmin. At least we found a way to get that foundation in place. Once you get the foundation, then you can start working with other tools to make sure that everything is optimized. So let's have a quick look and a quick recap as to what exactly Jasmin was dealing with. So if you haven't been in the previous videos, or you just need a little bit of a reminder, this was Jasmin's issue. She had a very high income at the beginning of the year, which went down to almost, well, pretty well nothing, except for this little bump that she got at the beginning of the fall. So November and December, she had absolutely no money. And that's what we were trying to figure out for Jasmin, how she could even out her cash flow a little bit so she didn't end up always at the end of the year being completely poor. And we looked at a number of different things. Again, we looked at cash, we looked at private equity, we looked at stocks, we looked at Bitcoin, we looked at real estate, and we looked at insurance. So for Jasmin, one of the main issues was that she couldn't have too much liquidity. If she had too much liquidity, she would just spend all her money, right? But on the other hand, it couldn't be too illiquid, or else she just can't access any of the money. So we were looking for that Goldilocks investment, right? Goldilocks. We're looking for the Goldilocks investment between liquidity and illiquidity. So we tried out stocks, which are quite liquid, but have some limitations on their liquidity. We found we ran into a volatility problem there. And the same as Bitcoin, volatility. Real estate, we had a liquidity problem. And for Jasmin's purposes, it was just the amount of money that she needed to put in. It was just too much for her. And then we looked at insurance, and insurance really did seem to have a lot of those Goldilocks properties. It was somewhat liquid, but not completely liquid. It was great for using leveraging if you needed to get money out more quickly. It grew at a stable rate. There were guaranteed values. So insurance really seemed to be that Goldilocks investment that we could at least use for the foundation. So here is our foundation. And at the bottom, we have insurance. And just from a financial planning point of view, whenever we're looking at a foundation to our financial plan, having something that's guaranteed and liquid at the bottom, at the foundation of that plan, is always a pretty good idea. Also, we managed to look after various risks with the fact that it's insurance. So that is now our foundation. We've got the insurance. But that isn't going to be the whole story. It's not enough just to have insurance. We need to diversify. So when we think of diversification, usually we think of diversification this way, right? So we've got our stocks, we'll say, and we've got our bonds. So it's two kind of variations on very similar assets. The idea really is that there'll be some kind of difference or non-correlation, we would say, over time. Maybe the bonds go down as the stocks go up. and it manages to even out that volatility over time. That's one idea. The other thing is you've kind of got a safe asset here, and you've got a growth asset here. So there's some validity to the old idea of what diversification kind of used to be in putting stocks and bonds together. But what we want to do is not put two similar assets together. We want to put completely different assets. So structurally different assets together to make really a triangle. And it's not a circle in that we're just allocating money to various things. These things are all going to be interoperable. So we're going to have the insurance as a foundation for the other assets. It's not just that they're different, it's that they're working together. So if we look at our next level, we're going to split it into, say, Bitcoin. And this definitely isn't a recommendation for you per se. This is just some ideas of how we can put this together. Again, if you want to figure out your own specific financial situation, you probably want to consult with a financial planner and potentially some tax planners. So we've got some Bitcoin, some stocks, and then we have cash. So again, the issue with Jasmin is that she just didn't have enough money to look at real estate. So real estate is something that she aspires to inside her corporation, but with this $300,000 that she's getting a year, for now it's not really going to be an option. So this is the structure of what we put together. Again, we've got a foundation, and we've got two different asset classes with very different outcomes. This one has some upside because it's stocks. It's also got the volatility. It's also got a long history of being a historical asset. That will give us some upside, some greater return, some growth. Bitcoin has a few advantages in terms of it not being able to be censored. So we can put this Bitcoin away inside a wallet where it's protected. So we're looking at different risks for different assets, right? So for the Bitcoin, we have a risk that it's very volatile. Nice thing about it is it can't be censored. It can never be taken away. So nobody's thinking that our money is necessarily going to be taken away from us, but whenever we're thinking about a financial plan, we have to think about every single possible risk, and we need to manage for all of them. And then the cash gives us that ultimate liquidity. Liquidity and stability. So that's how we put the plan together for Jasmin. Again, this is a diversification of assets. So the insurance, because the insurance can be leveraged against, can be used for the stocks and the Bitcoin, and then the cash can be cash on hand that we can use to pay any kind of interest charges that we have, to pay any kind of living expenses that we need in the moment. So you can see how all of these things start to operate together. We can put some of the profits of the stocks over into the Bitcoin. Everything, it can support everything else within the plan. So this is not the end of our discussion. We're going to move on to some other clients that I worked with who had somewhat similar but different problems that they had to solve. But this is what we got for Jasmin. So we've got a plan, everything supporting everything else, foundation. We've got different types of assets covering off different types of risk, offering different types of growth opportunities. And then we've got the cash for that liquidity and a little bit of flexibility. So again, this isn't a specific recommendation for you. If you want to, please feel free to reach out and we can look a little more specifically at your plan. Thanks, guys.